Hey everybody, Brenna Baucum, Collective Wealth Planning. Happy March. I want to kick off this month's video with a quick chat about market volatility. The stock market has had a strong run over the past several years with relatively few major pullbacks. And when things have been this steady for this long, even small dips can feel unsettling. And when the headlines amplify them, it's pretty easy to think that something more dramatic is happening. But short-term volatility is completely normal, and understanding what's typical can help us put some things into perspective. So, what is normal? Most of the time, the stock market moves up or down about 1% on a given day, and this happens about 70% of all trading days. But the news doesn't report it that way, does it? Instead, it talks in points, which can make market moves sound more dramatic than they actually are. So take the Dow Jones Industrial Average. It's what you usually see in the headlines. Right now, it's sitting at around 43,500 points or so as of this recording. So if you hear on the news someone say, the Dow Jones dropped 400 points, that might sound massive. But in reality, that's about 1%, a pretty normal day. Now look at the S&P 500, which gives a broader picture of the US stock market. That is around 6,000 points. So a 1% move is only about 60 points. Same level of movement as the Dow, but that number is a lot smaller and doesn't make for quite as flashy of a headline, does it? And while these ups and downs are one thing, we also know that corrections, and yes, even recessions, are part of the investing journey. The market doesn't just go up in a straight line, and periods of decline are part of how it functions, not a reason to panic. So the next logical question is, what is a reason to worry? Selling during these times. Making emotional decisions in the middle of a market downturn is one of the most damaging things you can do to your long-term financial security. History shows us that markets recover, but if you sell at the wrong time, you lock in those losses and you miss out on the recovery that follows. This is why we diversify and why I am so focused on working with my client families to build financial plans that are designed to be resilient. A well thought out strategy isn't just built for the good years, it's also built to weather the tough ones. So let's dive into this month's watch, listen, and read recommendations. To watch. So the two biggest demographics that I serve are retirees and Oregon PERS members. So I put together a blog on tax planning for these two groups. It includes a video on how financial planning can reduce your tax liability, checklists for reviewing your 2024 return, and more. To listen, a client recently introduced me to Azul Wells, a retired fee-only financial advisor and educator with a really robust YouTube and Spotify channel. So I picked a short clip that covers key financial planning areas for 50 and 60-year-olds considering retirement. To read, you can check out our recent contribution to AARP on the 6 tax breaks for people over 50, ones you'll want to be sure that you're taking advantage of. And finally, I want to extend an invitation to our upcoming webinar on May 1st, designed specifically for mid-career Oregon PERS members. In this session, we're going to talk about how to maximize your PERS benefits, ways to boost retirement savings, and some of the key financial decisions that you're facing during this phase of life. This session is ideal for those of you who are 5 to 10 years from retirement. If you're less than 5 years away, I recommend either catching our fall webinar that's going to be geared directly toward you or giving me a call. I'll link to the registration for both of the webinars below. As always, don't hesitate to reach out if I can be a resource for you. Have a wonderful March, and I will see you next month.